Hi everybody, my name is Miro. Welcome back to the channel. In today's episode, we'll talk about retirement planning. And one of the most common, actually it is the most common question we're hearing from clients all the time is, do I have enough? It doesn't really matter if we're talking to a multi-millionaire or the average middle-class Canadian family. This is a very, very common question. Do I have enough and when can I retire? While you're working, you are receiving a paycheck every couple of weeks or twice a month, whatever it might be, so it's pretty straightforward. But once you transition into retirement, your income will consist of several retirement income sources. So number one, government benefits, Canada Pension Plan, Old Age Security, and possibly GIS, Guaranteed Income Supplement. Number two, if you are one of the lucky ones, you might be receiving also private pension from your ex-employer. Number three, if you do not have a private pension, rest of your retirement will have to be funded privately. So private or voluntary saving programs, which are RRSPs, TFSA, and non-registered investments. And also the last category would be real estate. Canadians love to invest in real estate. A lot of pensioners will also rely on real estate to fund part of their retirement income. We understand that every family is different and every family has their own retirement lifestyle goals. But based on what we're seeing, about half of Canadians want to spend about $7,000 per month in retirement, which is $84,000 annually after tax, just retirement spending. And the other half of Canadians we're seeing want to spend more than $84,000 annually or $7,000 per month. So in this hypothetical example, we have based this retirement spending goal on $7,000 per month or $84,000 annually, just spending money after tax, adjusted for inflation for about 30 years. And what does a person need, or what does a family need in order to accomplish this goal? So let's look at some scenarios. In this first scenario, we have husband and wife getting ready to retire, and we're assuming they have no private pension, so they will only get CPP and OAS as far as government benefits. And between CPP and OAS, CPP at 80%, 100% OAS, husband and wife, they will receive about $3,400 per month. So it means in order to generate $7,000 per month, they need roughly $3,600 out of their own personal savings, RSPs, TFSAs, non-registered, and so on. In order for this capital to last 30 years plus, assuming 5% return, husband and wife, they will need about $1 million invested. So if somebody has CPP OAS only, looking to spend $7,000 per month for their retirement lifestyle, adjusted for inflation, you need about $1 million on top of your government benefits. Scenario 2, same assumptions, CPP at 80%, OAS fully, so $3,400 from government benefits, but also we're assuming one of the spouses has a private pension, and we're just assuming about $2,000 per month from that private pension, or $2,000 from rental real estate. So we're assuming CPP OAS $3,400 and $2,000 from other sources. In order to generate $7,000 per month or $84,000 annually to fund their retirement lifestyle, they will need a portfolio of about $450,000. So $450,000 is needed on top of a $2,000 private pension plus CPP OAS at $3,400. Now in the last scenario, we're assuming exactly the same as before, $3,400 from CPP OAS, but now both spouses will have private pension, $2,000 each, so $4,000 from private pensions or real estate. Now since CPP and OAS and also private pensions are already adjusted for inflation, we don't have to worry about inflation. Same with real estate, rental income would be adjusted for inflation. So the only thing in the last scenario that we would have to worry about is taxation and taxes, since we're assuming net spending. And we estimate that there is about $125,000 in capital needed invested long-term in order to pay for tax for the next 30 years. Now, we are oversimplifying here, obviously, but these are the three most common scenarios we're seeing out there. Either husband-wife CPP OAS only, or husband-wife CPP OAS plus one of the spouses will have a private pension or small rental property, or husband-wife CPP OAS plus husband private pension and wife private pension and more significant rental income. Now, we understand that every family is unique and everybody has their own retirement goals. We do have a planning software in which we can model pretty much any scenario for any type of a family that is possibly out there. So we do encourage you to see or contact an independent financial planner in your area. If you have any questions, I'd be happy to help. Please shoot me an email. Please do like the channel. Please subscribe to the channel. We'll be posting on a weekly basis. And thanks for tuning in today. Have a great day.